Aevo is an on-chain options and perpetuals exchange that's pretty interesting when it comes to the architecture, the products, the fees, the liquidity, and the risk model that they use. Definitely a next-gen decentralized derivatives platform here, combining options, perpetual futures, and also structured strategies on a high-performance layer 2. So today we're doing a full review of this platform. Get right into the video. Check out the link in the description so you can get started, and also you get some bonuses if you want to trade on Aevo. And this is really the sweet spot right now. You want to be trading on DEXs rather than on centralized exchanges, so you can get pretty much the most of your decentralized derivatives trading. Some focus on perpetuals, some focus on options, but today really is one that is an exception because it's a sophisticated on-chain derivatives platform offering a unified trading environment for perpetuals, options, and structured strategies. So it's not really built for casual users or short-term hype cycles, really built for serious traders and volatility experts here, and institutions that are looking for activity on chain. And platforms like Hyperliquid do definitely dominate the perp execution. Aevo excels at cross-product capital efficiency, in my opinion, allowing traders to either hedge and speculate and structure complex positions within a single margin system, right? So really, it's an interesting platform that's been around for a little while now. Rather than running on a shared L2 with competing dApps, it actually operates a custom rollup architecture, allowing you to optimize throughput, latency, risk calculations, and liquidation mechanics as well, right? So really at the core of its thesis is, a derivatives trading platform that requires infrastructure that is purpose-built, not repurposed. And really that's the core of their philosophy when you look at the options and perpetuals kind of being brought together here, because in the traditional markets, these are actually deeply interconnected. In options, liquidity informs kind of futures pricing, and futures volume supports options hedging as well. So this relationship is being brought on chain by allowing traders to manage options and perp positions under one roof using shared collateral. And that capital efficiency is really what's sparking this revolutionary shift and interest in a lot of traders. So, emphasizing portfolio managing rather than isolated positions, which kind of allows you as a trader pretty much to offset risks across instruments and also reduce collateral requirements and deploy capital more efficiently, guys. So execution quality definitely beats incentives there. You want a platform that really is reliable execution-wise, has clear pricing, and has a predictable risk behavior. And the architecture and settlement layer really is interesting. Like I said, it's a layer 2 roll-up designed specifically for derivatives workloads, and to make sure, it captures a high transaction throughput and also low and predictable fees applied with the deterministic execution under load, and also fast margin liquidation calculations. And they really have an order book based trading engine here, really allowing for precise price discovery, tighter spreads, limits and market orders, and kind of advanced execution as well. So products offered on Aevo, perpetual futures we've discussed. Options trading is also available. You've got structured strategies as well, examples being covered calls or protective puts or volatility spreads. They have a margin and capital efficiency system where you can portfolio manage, meaning risk is assessed across an entire account rather than per position, kind of enabling you to have lower margin requirements and risk, kind of reducing their liquidation risk, as well as having a more flexible strategy when it comes to constructing your strategy. And also the fees and funding is quite interesting. The maker fees are also minimal, and incentivized taker fees are aligned with professional venues, as well as options fees varying by product and liquidity. And funding rates only applying to perpetual contracts, not options here, but funding intervals are clearly defined. Rates adjust dynamically based on market imbalance, as well as historical funding data is easily accessible, and liquidity and market depth definitely the strongest with BTC, ETH, and major altcoins. And options liquidity, also the most liquid options venues when it comes to DEX platforms. The user interface is really professional grade, and performance responsive, and risk is very well managed. and you have all the tools to do that. Option specific risks, obviously volatility spikes and gamma exposure, expiry effects, things you just need to think about, smart contract risks and things like that, which is really a feature for any decentralized platform. Aevo versus Paradex, we've also done a comparison of that versus Hyperliquid and Drift. Check out the link in the description, check out the full review so you can go through all this information and you really see what makes this platform ideal for options users, volatility specialists, professional crypto traders and funds and DAO managing complex exposure kind of guys. And go check it out, man. The link to Aevo is in the description here. Check out the pros and cons, and really we've given it a pretty much perfect score for what it's doing in the on-chain derivatives exchange market here. Aevo, get started with the link down below. I'll see you guys next time. Peace.